Greetings, Jedi traders. David here of TradingFibs.com to bring you the technical outlook for week 2 of 2017. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. To support your knowledge of the market, see what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. All right, week 1 out of the way, 2017 rolling in with a dud. As indices found very little traction at first. There may have been pockets of intraday trend. It was a waiting game through the week, one report after another, leading finally up to Friday's monthly non-farm payrolls report. The catalyst which seemed to make that final push for the week to the highs, the NQ hitting the 5K bell and the Dow missing 20K by 0.37 ticks. Let's just call it one tick, but not good enough to ring the bell. Always make sure, guys, I'll remind you here at the end, always check out my pre-market trend. It's one thing to take an analysis here on Sunday as the market's set to open up here in a little bit. But as we roll through the week, we analyze the overnight Globex session and through the pre-market trend. So let's go ahead, take a look at some of those weekly recap charts quickly, and then jump into where we might be headed this week in either direction, make the case for the upside and downside. Hey, there it was on Tuesday. Nice move on the crude for the basic core setup. Here you have the 51.44, however you look at it, hike and Ashi bars to the downside. Crude selling off with a 300 tick drop to set off the week. A little bit of crunch during the week. Looking at the MML charts, like looking at those Marine Math charts on a longer time frame. Here we see on Wednesday price action from the lows to the highs, and that was pretty much it. So catching the ride. If you caught it off the bottom, awesome. If you rode it up on the HA bars anywhere from the bottom all the way up, even better. Take a look at Thursday's price action on the M60 for those trading the smaller version of that euro. There it is, possibility. Core chart setup, 50 underneath 50 above 144, 5 above 34. Get a breakout above the cloud, saying the same thing here. HA bars to the upside. And then finally, finishing up on Friday session was all three indices popping upside. Just getting a glimpse of the picture here in the mid-morning session up to the mid-session, and we just popped up a little bit higher. Simple setup, moving averages, 51.44 overlay from a 1-minute chart. So there was our big picture of the week, or short snapshot. So now what? As in any time in the past when indices to continue to push up to the higher highs, there's evidence for two sides in the market. Those that side with that might be going higher, and those that persistently are pessimistic and think the market should just come crashing down. So while I seek the short side as well, any good pullback is always signs of a healthy market. At some point, prices recover and will continue to make higher highs. All right, let's jump into the three indices, get a quick glimpse of where we are, technical momentum. Let's jump over to the daily gaps for a moment, as that's something I tend to watch. And with 100% guarantee, you can pick any of these three indices. Let's just pick the ES. Here is, we have some open gaps to the downside, 2197.25, the nearest open gap, 2094.25. But what scares me even more in the future, 1860.75 is a very, very, with 100% guarantee probability that we will come back and close that. Now that can happen not next week. It could, but it could happen in 6 months. It can happen in 3. It can happen in 10 years. But just to know that eventually at some point the market will retreat and come close those gaps. So nothing really as we hold to these highs. Why I'm with nothing down here until at least 18,929 as we review this each week. And NQ down here at 46.1075 as we just broke that 5K on the futures. Throwing for good measures the crude here as it continues to bounce in between 55.41, 51.48. I've been waiting out for that 55.41 for some time now and almost rang that bell last week. So there we are, daily gap wise, something to keep in mind every day, just a level of concern. Let's jump in then here to the combination of the MML, which are the Marine Math level. Again, not a part of my core strategy is what it takes to remain in a trend, but at least from support resistance levels and aiding you in an intraday setup, as we went over last week, looking at the charts. How does that aid you in a setup? Again, we'll remind you how you can do that here, but Again, here, let's jump right into the NQ as we see price action broke that 5K and a little bit above. And again, it doesn't mean exit at the 5K. It just means that price action throughout the week was headed up there, and support down below was nowhere to be seen. So, or not nowhere that price action was coming near. So downside, the case on the daily is that if price action resists here for some time and comes back down, I would look to major support resistance. I look to the 50 MA down here around 48.43 to 48.60. I'd be looking first for major pivot here, 49.21, as that shows up on both sides of the chart. You can see over here 49.21, 49.21 lining up. And to the upside, we got a little bit of resistance double layer up here on 2 time frames. So 50.39 at the tops here. If we break 59, then I'll look to 50.78 upside on the NQ. All right, jumping over to the let's go to the ES. ES price action here again has been holding some time here in the resistance on a daily chart. The case to the downside, 22.1875 on both charts, both sides here. Top of the 51.44 cloud, overbought and stall week reversal here. So good point for it to reverse. If we're to break that 22.50 on both sides, look for price action to continue downside and find that support. Any case to the upside, very small movement up here, should hit that bell up here, 22.8125. If we break above that, we'll look to 22.96 on the 75 tick chart, and then eventually up to 23.1250 here would be the top side level here on the Murray. And then jumping over to the YM for both cases, upside, downside here, price action to the downside as the 50 MA continues to drive on the daily. Major support resistance down here in 18.750 is going to be some time before we go and grab that. That could happen in any week. We've seen 300-point drops, but again, we'll assess that throughout the week. But right now, as we move into the second week here in 2017, major pivot here, and 50 MA down here, 19.375, which is support downside on the 75 tick chart. And as we just hit almost that 20K bell, I think we're going to go ahead and most likely hit it, and upside resistance 2013, which puts us in a pocket of multiple resistance and overbought here to the upside. So there's the case, and there's the technical momentum for all 3 charts. In the weeks to come, obviously, or at least the week to come, again, I expect that YM to ring that 20K bell. Volume has obviously returned to the market as multiple Fed speakers this week can shake things up in both directions. We'll go ahead and take a look at that economic data here in a moment. All right, so how do we tie this in on an intraday? Well, we check out my pre-market trend every day. We take a look at where's the momentum each day, watching the basic screen share charts. But again, when we take a look at an intraday setup, let's just go ahead and take a look at the core setup here. We see the NQ, solid body. We got a T310. If you eliminate all the moving averages, you're looking at a 51.44 cloud here. You see the 534 below downside, and all you got to do is see the setup here as the bigger picture was moving up towards that 5K. And there you go, solid body Heikin-Ashi bars upside to keep you in the trend as it moves upside, and then managing once you cross the moving averages up here or once you are in the cloud, leaving you with a very nice trend to move to the upside, whether it's the NQ, ES, or YM. All right, so there is how we tie that smaller picture into the bigger picture. Again, let's quickly review that. The YM, again, case to the upside, resistance up here, 2013 with multiple levels here. I'd love to see us ring that 20K bell at least on the futures here. Again, daily ES, case to the upside here. Not a lot of room to push up, but again, if it does, 22.81.25 with maybe a little bit of resistance. And if we push up above that, I'll look to each level on both sides. First, the 75 tick chart as well as the daily. And then to the downside, we have the 50 MA as well as to the 22.50 on both sides. And we move there, it's 22.1875. And the daily NQ, again, upside, looking at the breakout of 50.39. I'd be looking at 50.78. And to the downside, 49.21 if we break below that 5K. Now, again, if the higher level charts. I'm also watching this on a smaller time frame, which we've already looked at daily. I'll be watching the 4-hour chart during the week as well as the hourly. And one thing on the hourly that I'll note as I do here in my blog and each day is where's the current trend. And then now an hourly, while this will change throughout the week, as you can see here for the first week here on the ES, the 50 below the 144 changed trend midweek, only took a couple days. And by that point, the 50 holding up to the 144 pushed our ES even higher here. Here we could see the MML charts projection for the week from the support all the way up to the resistance and above. So nice picture that I'll monitor each day on the hourly. All right, so looking ahead to this week as we roll in on the economic calendar, again, we got multiple Fed speakers. We got Janet Yellen speaking post hours, no testimony, but again, I'm sure markets will be listening to that and react. A couple red star events, watching the crude throughout the week as well. All right, so that leaves me at the case the price action can lead in either direction at this point. Do we pull back 50% of last week's push higher or just a bit higher to shake out all the short hedges? Probability at this point, again, leads us higher on the bigger pick. Any news catalyst can obviously throw this market in the opposite direction. So watch for the daily 50 MA as we saw on the charts or major support on the Murray Mat, the MML charts. We know earnings season is also upon us with only weeks away from the major players, which can sway that price action as well. What can I say, Jedi traders? Always be ready in both directions. As far as long-term holdings, we got the start of a new quarter, time to rebalance with the gains of last quarter, and time to take off some from the top. All right, that concludes an insight into this week's technical momentum. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. My trading mantra of one simple strategy, any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at TradingFibs. And as always, I leave the crystal ball to the experts. I only watch what's in front of me and on my charts. And as always, leave your bias at the door when trading. For those of you that are interested in joining us in our community of like-minded traders seeking highest probability setups, feel free to email me, David at TradingFibs.com. You may join us on Thursdays or Fridays to view the live chart setups as they happen in the trading day. Have yourselves a Blue Zone week wherever you may be. I know it's pretty cold around this country, so stay warm. Good day, good night, and good trading to you.